The FOMC just raised the Fed funds rate 25 basis points, bringing the federal funds rate to 5.25 to 5.5. This is a 22-year high. And you know, that statistic just reminds me of how long, 2 full decades, we've enjoyed having such a very low interest rate. And so the economy is going to have to take some time to get used to things going at a slower pace. It's not a super easy money environment. Interestingly, stocks seemed relatively unmoved. The S&P 500 was very mixed today to begin with. There was just spackles of red, gray, and green. The one beautiful outlier was Google, which was a call that I've been making on this page consistently for weeks. I've been saying Google's going to do great with their earnings. They did well. The stock popped after hours. Now I'm going to go over the wall of resistance that it's currently at and the area where I think it's going to backtest. I'm going to cover Snap, Microsoft, Google, and a few other things, APLD for those who are in it. This is the Stocks with Josh show. Thank you guys for all the likes. Thanks for all the new subscribers that have joined in the last couple days. Hit that YouTube all notification bell to continue to get timely notifications of when I post the videos. And what we're looking for in the markets is we've got the Dow going on a 13-day winning streak. Clearly there's rotation going on. It's big tech that's sort of suffering, but Google, which was one of the ones that really hadn't come up as much as a lot of the other big tech plays, principally for 3 reasons that were a concern to Wall Street. One, they wanted to see an uptick in their cloud service profitability. They wanted to see an uptick in advertising in this potentially recessionary environment. But the third and the most important thing that Google needed to show Wall Street yesterday was that they were going to lead and win the AI race. And I think that they came out with all guns blazing and showed that narrative to Wall Street on all 3 of those fronts. It was a huge win. I'm going to have to get into the technicals on Google in just a minute, but I briefly wanted to talk about Snap and Microsoft before I get into that. Snap got snapped because they didn't come out with very good earnings. And so I had said to you guys that they were up against a very bearish $13 wall, and that if they did come up with a surprise beat, then if they broke through that, there was tons of room for it to move to the upside. But clearly, $13 was an impenetrable wall. They didn't deliver on earnings, and now it dropped all the way to $10 after market. It's hovering around $10 today. And personally, I really don't see why this won't bleed off to $8. If you've got a more bullish view regarding Snap and you believe that this has been too big of a reaction, that it's oversold, let me know in the comment section why you think this should go back up from here. Personally, I just see that $8 has become the definitive target because Snap just didn't deliver the goods. And then we've got Microsoft. Now, Microsoft is a really interesting play. I went into the Microsoft earnings saying that I did think that these guys were going to be up against sell pressure, similar to Tesla, similar to Meta today. I think that they've got more to prove right now because the stock's already run up. So it's a little bit of the scenario of sort of buy the rumor, sell the news, even if the news is positive. The news was reasonably positive, but afterwards, in the dialogue, the CEO said something that sort of surprised the market, and he said that there was a high cost to integrating AI. Now, specifically, the area of concern that I have for Microsoft is kind of what the CEO of NVIDIA had said. He said all of the technology that's out there right now, the $1 trillion of infrastructure, has been made obsolete by the advancement of new hardware, and that all that stuff's got to be replaced. Now, this is what opens up a new opportunity for companies like APLD that had a focus specifically on the higher end hardware designed to cater specifically to AI needs. This is where APLD can come in, even though they're a small guy, and potentially outpace for a period of time companies like Microsoft, which have to then go back and put in new money to turn expensive hardware so that they can be in a position where they can compete. Really, it's anybody's market right now, and that's one of the reasons why I'm bullish on APLD. But I'm going to take you guys into the charts on Microsoft and let you know what I'm seeing. Do we have an absolute breakdown? Is there opportunity for this to swing back to the upside? I'm going to show you guys that in just a moment. But I want to talk about the APLD chart real quick. APLD, Applied Digital. Guys, these are the ones I brought to you guys weeks ago. And I kept pointing out that if $7.80, every time we got back above that, we squeezed up to $9.90 repeatedly. This has been winning a winning play over and over and over again. I heard from a ton of you guys in the comment section that you had won and made some nice money on it. But here's what happened last night. We got a push above 990, which had been acting as resistance. And here's one of the lessons that I want to point out to you guys is that the more times you hit a target over time, that's when you're eventually going to bust down the door. So I want you guys to think about it like a bunch of police or a SWAT team trying to get into a house. That's all of the bulls trying to go after that $9.90 price range. And if they hit it repeatedly, well, eventually the door is going to get busted wide open and everybody's going to come piling in, and it's going to go much further than the door, which is what happened with APLD. We shot up above $10. So now what I'm looking for with APLD is I'm looking for it to come back, and it's going to back test 990, and now we want to see 990 hold as support. So what had once been resistance becomes the new support. So it's no longer 780 that we're looking to be the new support. We're looking to go into that upper price range, and we want to see 990 hold as support. Now, I'm going to give you guys my stop loss. I'm in APLD. I did not take profits. I'm not selling right now. I've simply raised my stop loss to $9.10 because I do believe that the $9.90 range is going to get tested. We're going to back test that a couple times, and we want to see it hold, but it doesn't normally just come and hit 990 perfectly and stop and bounce. It pulls back into that range. That's why I'm at $9.10, because I think it's a safe place where I won't get kicked out unnecessarily. So that's my current plan with APLD. Let me know if you guys have gotten back into it, or whether you're scared to touch it, or whether you think it's going to go higher, or if you think it's going to come down lower. Right now, after Microsoft earnings, I was re-incentivized to focus on companies like APLD that might be able to be quicker and faster about going after this AI business than companies like Microsoft, their CEO complaining at the high cost of upgrading and turning hardware and how it's going to affect the bottom line. The reason why that matters for companies like Microsoft is because the market's got a multiple already assigned to them, and they want to see business as usual. They want to see growth, and they want to see business as usual. They don't want any erosion of profit margin. That's what's affected Tesla. It's why Tesla's not above $300 right now, is because Elon said that he was willing to do new price cuts, which would directly threaten profit margin, and Microsoft was complaining or pre-warning us that their profit margin could be in question as well, and that means that we have to reassess the value of their stock. All right, let's quickly go into the charts on Microsoft for a minute, because I want you guys to see this ascending wedge. Now, I have drawn the lines different ways at different times. Last night, it looked to me as we might have broken out underneath that wedge. If we do eventually break this wedge, the story of an upward move for Microsoft is 100% over. But I redrew my line today to a different scenario, and it could be that we're simply sitting right now at the very bottom of the newly drawn wedge, because, you know, it's not a perfect science. If we get a definitive bounce from here, so it's going to close today here, and maybe after hours market or tomorrow it begins to give us a nice green candle, then I would suggest that all we've done is come back and touch the bottom of the wedge, and that opens up the opportunity for us to go all the way back to the top of the wedge, a massive move back up to even as high as the $375 range. But if tomorrow we get a equally bodied red candle that drops us beneath this current price, then I would say that's a clear confirmation that we have broken the wedge. You know, I've looked at this chart a number of times. I actually had one thing in mind to talk about yesterday, and I changed it today. I've redrawn the line, and I'm going to say that between today and tomorrow, we'll know whether or not we're moving back up towards the top of the wedge, upwards to that 375 and maybe even upwards to 400, or whether or not this wedge game is over, it's broken down, and we're going to be going much lower. I think we'll know that within the next 24 hours, so it's going to be really interesting to watch and see what happens with Microsoft. All right, let me take a quick station break. If you need better trade tools, we are right in the center of earnings season, and I particularly love to use the MooMoo app for their earnings calendar, which I personally find the absolute easiest to navigate to see who's on deck, which companies are reporting next, when they're reporting, and then after they report, they give you an extremely easy to review overview of exactly what was reported, as well as some analyst opinions of it. So it just makes it so easy if you're trying to better understand how to play earnings. I use the MooMoo investment app, and if you're new to MooMoo, you don't have a MooMoo account, you can click on the link in the top pinned comment of this video, and you're going to see that they're currently offering up to 16 free stocks for new customers and a $50 sign-up bonus. They're going to give you guys $50 cash. Click the link and look at the details for yourself. It's only good in the US and Australia, and the offer for both countries is different, so you need to review it for your own country. Plus, I host a chat group on the app called Stock Josh Fam, where I talk technicals and answer questions as much as I can get on there. I will go on there again today after this video posts for about an hour, and I'd love to talk with you guys there. So click on the link, get your free stuff, start investing, and then we'll continue the conversation over in the chat group on MooMoo. All right, let's get into Google. Man, Google, I tell you guys, I was so pleased to see this stock move after believing in it and investing in it and watching those charts and understanding that it was due for a break up. We got that breakup, but now we've got to make new decisions today, because Wall Street's saying, okay, well, we got you here. What's next? Where do we put our stop loss? Is this going higher? What do the charts tell us? I'm going to try to break it down for you guys today, but let's just take a brief moment and celebrate making some money on Google. It's the shining star in today's market as well, so that's got to feel good for all of you guys. It feels good for me. Well done. All right, let me just look over my notes. So basically, we saw that Alphabet's shares rose by 7% after hours. It hit a high of $132.69. Came out with a revenue of $74.6 billion and earnings per share of $1.44. In particular, what was seen by Wall Street, the big picture, or what was important, was that there was a tick up in their cloud service business after it had been going down for over a year. That's a really important part of Microsoft and Google and Amazon's business, and what we saw is that if more corporations are using their cloud service, it's sort of a sign that the economy is moving forward and spending more money. It's sort of similar to, are they using cloud and advertising? Both of them have become signals as to whether the economy is doing well. And so there was a tick up on the cloud service business, as well as they saw a tick up on advertising on their YouTube business, which was also a positive sign. But it was their AI rhetoric that got everybody's attention. They basically came out and said, no, we're not losing to ChatGPT. We're not losing to Microsoft. We're absolutely going to win the AI game. We're going to be the ones that introduce the entire world to AI, and we're going to run the fastest out of everybody with profiting from that introduction. That was the story that they were telling, and I think it's a true story. That's why I think that Google's going to continue to do well. But the technicals, they sort of tell their own story, and so we've got to look at both the fundamentals, which I thought was good news coming out of Google yesterday, but what do the technicals tell us? Because sometimes that can be a different story, sometimes it can be the same. And then there's the question, what did Josh Nichols do with his shares? Well, let me just go into the charts and kind of take an overview of what's going on with Google. So these guys, we're looking at the 1 hour chart, which is different than charts I normally show you. I normally show you guys charts over the daily time frame, but today we're going to look at the 1 hour chart, and we're going to look at the last couple months. We see that Google has been in a price range of $129 is the local high, with $115 being the local low. Now, you guys know, because I pointed it out to you almost every video I've talked about Google, that 125, which was the price point that we hit in May, has been a really hard barrier. That was a price point that I had predicted before May. I said that we were going to run up to it, but when we ran up to it, it's become a barrier ever since. It's hit that price range repeatedly, and it struggled to stay above it. Only the one time did it peak up to $129, and of course it failed and came back beneath that. So getting above 125 was a huge success, and that was great. We pushed even above the local high of $129. But right now we are just holding that level, and we're not entirely sure whether we're going to push higher. We did see a big volume day today. It was up over 83% above regular trading volume, and that's what you want to see. You don't want to see the volume begin to slow up. You want to see high momentum on a big day, because that will tell you that we're going to get continuation. I'll tell you what I did with it and what I think is very easily could happen. We could easily come off of this position of 129, and we could easily backtest that 125, because here's how I want you guys to view it. we've mostly been contending with 125. We only one time contended with 129. And even though we're currently above 129, it seems to me that the stronger level of what had previously been resistance of 125, that's really where the stock wants to come back, back test, and prove that it won't fall below. And so I do think it seems likely to me that we are going to lose this elevated level potentially pretty soon and come back and hit 125, 126, somewhere in there, and then begin to bounce up. I still see Google as being in an upward trend, but I think it would be very realistic to see us come back, test that level that's been a harder level for us. It seems more realistic that we'll do that in the coming days. And so right now, what have I done? I've set my stop loss at $128, and I will rebuy at the 125, 126 level. I did sell out all of my call options. I have no more right now. I've taken profit on those because I think that there is a greater likelihood that we will slow down right now. Even though I'm still bullish and long the shares, I have swing Google and I have long-term Google, which I don't touch. I just add to it on bearish red days. But right now, my swing Google, I'm still looking for it to move higher into the 130s. I'm not giving up on a move right now up into the 130s, but I think it would be very realistic. I think it's quite likely. I even thought of cashing out today, but I thought, let me just stick to my trade disciplines, put my stop loss beneath this price because nobody knows for certain. We might literally just take off from here and go another $5, $10 higher, and I don't want to miss out on that. I'd rather just let my stop loss kick me out if this current momentum shifts. Well, all right, guys, that's about it. I'm shooting this video while the Fed is talking, so the market could be going crazy and I wouldn't know it, but I'll assess that. We'll talk about it in the chat group over on MooMoo if the market does capitulate and I find myself, when I'm done with this video, I've been kicked out of my APLD, kicked out of my Google shares, and kicked out of my Tesla. We'll see how it all goes. At the moment, the markets have not had any knee-jerk reaction. So hopefully going over these technicals have helped you. I think that Microsoft is going to be interesting. This could be a huge buy opportunity. But personally, I would be content to wait for it to show me what it wants to do. Because even if it popped up on a nice green candle and we moved above the high of the last red candle, then that means that we're going to go back and test the top of the range. So that is one to wait on. Snap, I have no interest in at the moment. And Google, I told you guys my game plan. Hope this was helpful to you guys. Let me know what you've been doing in the stock market today. Has it been a winning day for you? I hope it has been. Thank you guys again for hitting the like. Hit that subscribe if you want to get the next video, the next prediction that I make on this page every single day with stocks and crypto. My next couple videos, I'm going to cover Alibaba, which I think is definitely going to be going into a bullish run. And I'm going to be covering some crypto, some important things I see right now happening there. That's it for today. As always, peace and blessings. Take care. We'll see you in the chat.